Look, until we accept that September could continue to be choppy from the standpoint of the seasonals, from the standpoint of the volume slowly, and I do mean slowly, coming back in, the idea that we're waiting on the House to come back for the budget, all of these things could put us in a very volatile, choppy range, which means we're going to see more of the kind of action we saw at the latter half of August, which is a little bit of a sell-off and then a lot of chop with a little bit of a recovery into the end of the month. I mean, that's really what this shows. So that was not that inaccurate. So let's just presume we could see more of the same. If that's the case, right, we use data to understand what our decision should be in terms of, let's just start with time frame. And let's do a quick review of how we're going to deal with an environment like this. So proof's in the pudding, as they say. And so let's jump over to the trades that we put on today, right? So let's go through that window in the morning that sets us up for the first window, day trading window, which is at minimum 65 minutes and really at maximum about 2 hours. We're still working with the minimum 65. Sometimes we push that 65-minute window out to about 80 minutes, right? And that's going to depend on the quality of the trends. Today, things were very, very messy. So remember that when we're taking a look at the day, we want to do it from the standpoint of AM and PM. Now, this is far better for traders because that means we have two different windows. We could be bullish in the morning, we could be bearish in the afternoon. So for example, on the Dow, we were bullish. We had a 34,770 entry with a 34,850 exit. That's an 80-point move in YM futures. Okay, what else did we do? We had an RTY set up, and this is how choppy and wayward things were, and this is where the short term really makes so much sense. We took advantage of what? Well, on the Russell, things were weak. Following the multi-trend, we know that we need to be short sellers. So that's what we did. We focused on the short side of the RTY. This could include the micro or the IWM. So let me show you how we would do this. Because I think a lot of folks are wondering, Ragh, we were quick long the Dow, but we were looking short the Russell? Yes, right? So here at 953, we're trying to build that Dow short out. And then moving out to IWM, let's stick with the indices here for a moment. We're saying, all right, wait a minute. Different market structure means a different strategy. So here you'll see that we have the 189 put that we built as the market went up both on the RTY and the IWM, 6 of one, half dozen the other, whichever you prefer, right? With that movement back to the downside. So here we are, long Dow, short Russell. Not ideal, but that's what the market structure, that's what the grab candles, right? This is what all of this said. I mean, look, there's not even a green candle to be found and barely any blue neutral. I mean, is there anything we're going to think about doing but short? But a lot of traders are going to think, well, let's try to find a low and buy it. No, rather, if we see an environment like this, let the multi-trend guide your direction. How about we find a high and we short into it? Or how about we find a high and buy puts, right? So these are just two of the indices that we set up. Look, one of my favorite corners of the market continues to be crude. Crude on the long-term chart is bullish. Crude on the hourly chart is bullish. And this was one of the rare buying opportunities of the morning. Now, again, crude's a great example of why we need to have an AM and a PM mindset. An AM and a PM mindset. It's separate, right? And really the cutoff is this area between 11:30 to about 1:35. Okay, so this is where we would consider this the midday doldrums, the MDD, right? Okay. In the morning, the idea was to look to buy crude or buy, as you can see here, energy stocks. Because if crude is heading higher, it's probably carrying Exxon and Chevron with it. Now, once we're done with that trade, and we start moving to break even and the trade organically takes us out, hit the target, move to break even, and it just organically takes us out, we start with the PM session. Well, the PM might as well be a completely different day. Look at this. AM looks nothing like PM, does it? And that's why dividing those two windows but using the same tools makes so much sense. You come back around 1:35 and you start to notice that you're inheriting more red grab candles, you're inheriting more weakness, and you'll look for then a different type of setup in the afternoon. And this is where a lot of traders get into trouble, especially in choppy markets. They think that whatever they did in the morning, or even worse, whatever happened on the open is what's going to happen all day. We'll take a look. On the open, we actually had weakness in crude, but it made more sense to wait for the HPMR and get long, right? So there's a lot of things with timing. The open versus the AM session versus the PM session, and avoiding the midday doldrums. You get this kind of timing down, then you get confidence with your directional bias, where you could say, look, there's a buy on the Dow this morning, but there's a short on the Russell. And you can take advantage of these things, but you're using the same tools to do it, right? That's where it gets far easier to rinse and repeat. And probably a lot of this sounds really familiar, right? Because we talked about this in the webinar last week. We're going to talk about it in the webinar coming up this week, right? I know a lot of you said, okay, Rog, this is really helping with putting the pieces together. So you can check out last week's webinar at simplertrading.com/consistent-replay. It's also at the Simpler Trading YouTube channel. And then we're going to pick up part 2 of this conversation this Wednesday at 8 at simplertrading.com/gain, right? And this is going to continue to put the pieces together. So hopefully, why do we have to be short term? Macro, uncertainty, right? The lack of trends. Even right now, the fact that volume's coming on really slowly. Yes. The second part of this is on mornings where we don't have consistency in the trends across the indices. One's bullish, one's bearish. We need to have a shorter term approach. That's going to all help this gel in terms of realizing I'm not here to trade 2, 5, 10-day follow through. This might be morning follow through versus afternoon follow through, and that's ideal for day trading, gang. Boring day trades. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.